2022 was the second year in a row that my dividend portfolio outperformed the market, and because of that, I've been getting a lot of questions about exactly which stocks I'm invested in, so that's what we're going to be going through in this video. I'm going to show you all of the holdings across my two dividend portfolios, my main one on Charles Schwab and my Roth IRA on M1 Finance. But before we get to that, in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, I want to give a quick shout out to today's video sponsor, Southern New Hampshire University, but we'll talk more about that later. Now, starting with my dividend portfolio on Charles Schwab, which is currently valued at just under $43,000 and has taken quite a hit today. I'm down 1.74%. But like I mentioned just a moment ago, this portfolio has beat the market for the last 2 years in a row. In this time period, overall, my portfolio has gained about 31.5%. And if we break that down on an annualized basis, we can see that this amounts to about 14.66% per year, which is beating all three major indices by far. In this time period, the S&P has seen an annualized return of 2.7%, the Dow Jones about 6%, and the NASDAQ is actually down nearly 10% in this time period. And I've spoken about this in previous videos, but as we'll see in just a moment, many of the stocks in my portfolio are those safe, sleep well at night stocks that tend to trade with less volatility than the market as a whole, which at least in 2022 resulted in my portfolio holding up better than the rest of the market. And in 2021, I don't know exactly what happened, but my stocks performed very well, and this performance was given an extra boost by the dividend income. Taking a look at my dividend portfolio tracking spreadsheet, which you can start using for free, there is a link to it in the description of this video. I hope you check it out. But looking at this, we can see that my portfolio brought in about $940 of dividend income in 2021, and this was increased by quite a bit last year in 2022, where I brought in $1,735. But anyway, moving on, in this portfolio, I have 22 different holdings, and we're going to go through each and every one. Starting with Apple at the top, I have 6.64 shares at an average cost per share of $129.45. Next up, I have about 10 shares of AbbVie at an average cost per share of $114.20, and this is one of my portfolio's better performers. Speaking of better performers, this third stock here is Chevron, which is by far my portfolio's best performing position. I have 13.25 shares of Chevron at an average cost of $93.54. And this brings us to the fourth position, Enterprise Products Partners. I have 73.5 shares at an average cost of $22.43. And then next up is Intel. You guys can see I have 63 shares at an average cost of $44.29, and this is by far my portfolio's worst performing position. But anyway, moving on, next up we have JEPI, which is the only ETF I have in this portfolio, and I have just over 22 shares. And then my seventh position is Johnson & Johnson, 16.3 shares of J&J at an average cost of $165.20. And then we have Coca-Cola, 23 shares of that bad boy at an average cost of $51.44. And then KRC. I have exactly 40 shares of KRC, and I'm down just a little bit with an average cost of $43.74. And then we have Lowe's, which is one of my favorite high growth dividend stocks. I have 12.3 shares of Lowe's at an average cost of $194.33. And then Main Street Capital Corporation, I have nearly 40 shares of this, and I've been buying a little bit more Main recently. It's had a nice little run up, and my position's about breaking even. We can see the average cost is pretty similar to the current share price. And then we've got 3M, which is really not doing too great for me, guys. I have just under 12 shares of 3M at an average cost of $165.43, and there's quite a big difference there, so I'm taking quite an L on 3M right now. But anyway, moving on to the next stock, Altria Group. I have just over 51 shares of this high yield dividend king at an average cost of $42.86. And this brings us to Realty Income, which in my last video I referred to as the Mona Lisa of dividend stocks. You guys should check that one out after this video. But I have 37 shares of Realty Income at an average cost of $56.58. And then we have ORCC, just over 100 shares of this bad boy at an average cost of $13.62. And then Procter & Gamble, which is my portfolio's biggest position. I have 23.4 shares at an average cost of $138.60. And then my next favorite stock behind Procter & Gamble, or maybe they're tied, I don't really know, but this one is Starbucks. I have about 38.6 shares of Starbucks at an average cost of $89.95. But anyway, next up we have Snap-on, which is another one of my favorite high growth dividend stocks. I have just under 9 shares at an average cost of $211. And then we've got Southern Company right here. It's the only utility stock in my portfolio. I have just about 18 shares of Southern Company at an average cost of $60 per share. And then these last three here, we've got AT&T, about 101.5 shares of AT&T. And then Verizon, I have just under 44 shares of that. And then last but not least, we've got WP Carey. I have about 17 shares of this real estate investment trust at an average cost of $69.25. And now that we've gone through each of the holdings in this portfolio, I want to show you what my best and worst performers are, guys. Before we get into all of that though, I want to talk to you about today's video sponsor, Southern Southern New Hampshire University. Now, as someone who actually didn't finish college and most certainly wasn't after a degree in finance when I was going, there are times where I don't feel the most qualified to talk about some of the topics we cover here on this channel. Because of that, I'd be lying if I said I'd never thought about going back and finishing my degree. And if you feel the same, if you feel like your experience is holding you back from pursuing the career that you really want, then I am so excited to tell you about today's sponsor, Southern New Hampshire University. SNHU has one of the largest accredited nonprofit online degree offerings in the country, and I want to talk to you specifically about their finance program. In this program, you'll learn to identify long-term corporate investment opportunities to increase shareholder value. You'll learn to apply theories of asset allocation, security analysis, and portfolio diversification to efficiently manage an investment portfolio. You'll learn to utilize the rules and regulations for financial accounting and reporting in a global economy. You'll learn to generate financial records and financial statements for users in accordance with governing rules and regulations. And you'll learn how to analyze, interpret, and communicate financial and accounting information to internal and external stakeholders. SNHU is radically affordable, with their tuition rates being some of the lowest in the nation. Also, when you go to request information about one of their 200 plus different programs, a real person will hop on a call and discuss how the program can benefit you personally. To learn more, go to snhu.edu/Ryan or find the link in the description to see what the current average annual salary is for someone with a finance degree and to request more free information about the program. It only takes one click to find your calling, so once again, go to snhu.edu/Ryan. All right, now with that behind us, we're going to move on and talk about my portfolio's best and worst performing stocks, starting with Chevron here at the top, which is by far my best performer. I'm up about 90% with this position, or just over $1,000. And then my second best performer is AbbVie. I'm up about 31%, followed by WP Carey, a near 20% gain. And then we've got Starbucks. I'm up 17% with Starbucks, who's actually seen a pretty big gain in the last 30 days. Here we can see that just in the last month, Starbucks has really climbed and is up about 7.5%, currently sitting at about $105 per share. But anyway, moving on, I have some other positions that are also performing really well. Realty Income's up about 17%, Coca-Cola's up about 16.3%, Snap-on's up 15%, and Snap-on's also done really well in the last month. Like Starbucks, just in the last 30 days, Snap-on has climbed about 7.5%. That's really solid. But anyway, moving on, we've got a couple more who are at double-digit gains, Southern Company and EPD, and then the rest of these positions aren't doing too bad. Lowe's, Procter & Gamble, Apple, Johnson & Johnson, Altria Group, and Main Street Capital Corporation I'm also in the green on. And Main Street's also done really well. They've seen a gain of about 7% just in the last 30 days. Now, after Main Street Capital Corporation, the remaining stocks here, it looks like there's 7 of them I'm currently taking a loss on, starting with ORCC. I'm down about 5%, but this stock has also done really well in the last month. In fact, ORCC has jumped double digits just in the last 30 days, where they're up 10.3%. And then, like I mentioned earlier, I'm kind of taking a loss on KRC. I'm down about 7.5%. I'm definitely down on JEPI, about 8.5%. AT&T, 12.5%. Verizon, I'm down 22.35%, but they've also seen a pretty substantial gain in the last month, guys. Looking at this, they're up 7.5%. And with that, my portfolio's 2 worst performers are going to be 3M, I'm down 25%, and then Intel, where I'm down a whopping 35%. Pretty insane. So as you can see, my positions are kind of all over the place. I've got some that are doing really well, up quite a bit, and then I've got some that are really not doing so hot. And the great thing is, which I don't even think I need to say this, but the great thing is that no matter what the share price on all of these holdings are doing, I'm still getting some dividend income coming in from each one. And across my entire portfolio from all 22 different positions, I'm bringing in a total of $1,956 every year in dividend income, which breaks down to about $163 per month, $37.6 per week, and about $5.36 every single day. Which is crazy. That's like almost a free #1 from In-N-Out Burger every single day for the rest of my life. All right, now moving on and getting into my Roth IRA. This portfolio is really not anywhere near as exciting as my main portfolio that we just looked at. And I have my Roth IRA, which I call Margarita Money, here on M1 Finance. And I started this portfolio at the beginning of last year. It has a current value of $3,152, and all time I'm down about 2.5%. And like I said, this portfolio is nowhere near as exciting, as I only have 4 different positions and they're all ETFs. I've got SCHD, VU, the Vanguard S&P 500 ETF, VYMI, the Vanguard International High Dividend ETF, and then VBR, the Vanguard Small Cap Value ETF. I'm down on all of these positions with the exception of SCHD. I'm up 3.22%. And really, guys, this portfolio is primarily just the top 2 holdings. VU, I've got 30% in, and then SCHD, I have 50% invested in. And the reason why SCHD is so heavily weighted in my Roth IRA is because I think it is the best ETF out there, hands down. And if you want to find out more reasons why I think SCHD really is like the holy grail of dividend ETFs, then then check out this next video right over here. In this one, we're going through this ETF top to bottom, and I'll show you how you would actually be beating the S&P 500 by over 20% if you just invested in this one ETF. So click right over here, and I'll see you in the next one.